Between tariffs and a looming recession, the challenge, well, it's about to get a little defensive. Hold on to your seatbelts, folks. This is going to be a good one. A good portfolio does tend to be adaptive to market conditions. And with the coming economic storm, it does make sense to make a few precautions. I often will say how you respond to an incoming recession. Well, it depends a lot on your length of runway. And with the challenge, we do have a pretty good sized runway, but not that long. Be honest, I'm hoping to finish it up within 10 to 12 years. So with that in mind, we are going to be moderately aggressive in some of our moves. Not too aggressive though. If you do, of course, have a longer runway than what we have here in this challenge, your preparation for shoring up your defenses could simply amount to a quick checkup to make sure your holdings are measuring up fundamentally, and maybe pruning a stock here or there that you do not have a lot of confidence in to survive a deep recession. With a shorter runway, you may choose to prune a little bit deeper, which of course could include taking profits now to move into your cash position or to invest in more defensive stocks. That is exactly what I have done for the challenge this time around. With that being said, I also brought back the Air Canada swing trade, as I have a feeling I'm going to get a much longer runway on the buying window this time around. A sub to the channel is your runway into future content. I think we should just jump right into the challenge portfolio. We're going to start with, we'll start with the stocks that we have not added to in this cycle. We've got BlackBerry, and they actually have a total return of 6.23%. This, of course, was that speculative stock from last time, and I am going to hold on to them for sure. We also have Scotiabank with a total return of 20.53%. That's not too shabby. We have Diversified Royalty Corporation sitting at an 8.13% total return. We have Canoe in with a 31.03% total return. They did fall. They actually did fall a wee bit, but they really are looking good for sure. Fortis coming in at 22.19%. Not too shabby, Fortis. We have HHIS. Oh boy, they're down a little bit. Negative 6.32% total return. We got Pizza with a 7.71% total return. They have recovered quite a bit from where they were just a few months ago. We also have QQCL coming in at 5.44%. And we got RioCan. They are in the negative 0.80%. We have been expecting a little bit of pain for RioCan with the announcement of, you guys know, the whole Hudson Bay thing. That is going to hurt them for sure. We have RMAX at 1.73%. And Timber Creek Financial coming in negative 4.79%. Come on, Timber Creek. I need to see some green. Please show me green next time. We also have TransAlta at 5.29% and XEG 1.63% total return. Okay, let's switch gears a little bit and we'll take a look. We'll take a look at the stocks that we have added to this time around. First off, we've got Bell. I did add one share, taking us to a total of 15. We currently have a total return of negative 14.39% on this one. I am going to continue to average this one down as I'm still going to ride it into recovery. Even with a recession, I'm sticking to this one. I also added 8 more shares to Bird Construction, taking it up to 20. Their total return in the challenge, it's sitting at 5.40%. I'm still very bullish on construction. Tariffs are going to hurt a little bit, but I think long term, this is a great play. Up next, we have CNQ. I added 2 more shares, taking us to 17. Now, they currently do have a negative 1.87% total return. I am going to continue to add more next month, as long as CNQ continues to take the low road. Next, we have Canadian National Railway. Oh boy, CNR. I added 2 more, taking us up to 6 in total. They are currently sitting at a negative 2.84% total return. This month, they really had quite the dip, and I had to take a bite. I had to take a bite for sure. Up next, we have HMM.A, so Hammond Manufacturing. I did add 5 more shares, taking this position up to 50 and a negative 2.02% total return on my portfolio. I still love those ham and companies, and I will hold through whatever is coming. Next, we have JEPQ. I did add 1 more share for a total of 12 shares and a total return of negative 4.73%. This is one I am happy to dollar cost average into throughout the recession. I do think on the other side of that recession, the rebound on this one will be really good. So those are the stocks that I added to. We also, of course, did that big defensive rebalance. So a lot of the stocks I bought, as well as some of the new positions that we're going to get into here in a wee bit, were financed by the stocks I sold. So let's take a look. We'll start with SRV.UN, Sir Royalty. I love this stock, but with a recession on the way, it is not going to recover as fast as I had hoped. And in fact, I was willing to take a small loss on this one. I sold all 40 shares for a total loss of $13.81. So that's not a bad loss, to be honest. And it's in this rebalance, it's the only loss that I took. It's the only one. D-Wave was one of my speculative plays. And, well, they were doing well, but I still decided to take the profits for my defensive strategy. I sold all 10 shares for, well, we didn't have a lot. A profit. We got a profit of $12.70. I also sold out of my Schwab position for a profit of $22.73. I do like this ETF, but I was looking for some green, and unfortunately, they were expendable. I also sold the 2 shares of VFV that I was holding for a profit of $23.56. Once again, I do love this ETF, but I needed to finance some of my defense. Okay, this is one of the big ones. I I sold Brookfield Asset Management. They are one of my favorite positions, and I closed out at a nice profit of $272.99. I will absolutely be looking to get back into the position during the recession at hopefully a much lower entry point for sure. I, of course, also sold out of my cash position, so my cash ETF, because I'm moving it to T cash, so TCSH. And this was, well, based entirely on the bigger dividend. Obviously, some of that money went into some of the stocks we've already purchased, but we also got some new additions, and a lot of that money helped funded these acquisitions. So I did add 5. I added 5 new positions to the challenge this month. First off, and we already know Air Canada, I started up the Air Canada swing trade once again, and this time I added 50 shares in the month at an adjusted cost base of $15.25. I will continue to add each month, provided Air Canada is under $17. Once they recover and move above, and I'm thinking $22, I will sell them once again. Mind you, this is a swing trade that it could take a year, maybe longer, and I'm absolutely okay with that for sure. In fact, the longer runway of buying I have, the more profits we're going to make on this one. I also opened up a position in Extendicare. So I did a recent deep dive on them, and I really liked what I saw so much that they're now in the challenge as I'll call them a high potential defensive play. I love that stock. I also added PPL, and I am very keen on pipelines, and I do see some strong potential with midstream energy as we look to move oil and gas from the west to the east. There is a potential profit flow in them pipes. I also, of course, opened the position in TCSH. This, of course, is another cash ETF that is simply paying me to park my cash, paying me more than, well, CASH was, hence the change. Finally, I added the iShares S&P TSX Equal Weight Utilities ETF as that is simply a sector I do not want to ignore through the recession. Okay, let's take a look at the overall portfolio. March was a red month on the market with more than a few major buy the dip opportunities along the way. Looking at the numbers, we did add another 500, taking our investment up to 10,500. The community added another $48 for a total of $974 thus far. A huge, huge thank you to the community for sure. When all is said and done, that added up to $11,467 investment in the challenge. We also received $69.88 in dividends for a total of $729.16 to date. When we added in the dividends and the growth, we get a portfolio value of $12,286.30. This takes our total return for the challenge. It takes it down a wee bit to 11.85%. And that, as we move through a recession, that obviously is going to drop even further. But wait till we get to the other side. Wait till we get to the other side. Let's take a quick look at the portfolio's diversification with data pulled from the Blossom app. Speaking of Blossom, if you want to check in on the challenge, I do have it uploaded there, and there is a link below to sign up for the app. According to Blossom, our top 7 represented sectors are industrials at 25.3%. Yeah, we are a little over diversified on that one, but I couldn't resist that CNR dip. We've got energy coming in at 15.6%, real estate at 12.9%, utilities at 11.9%. As a defensive sector, this one may move up a little more in the coming months. Financials are coming in at 9.1%, fixed income 6.7%, communications 5.4%. It is time to look at the toad and the goat of the portfolio for the last month. Our top 5 worst stocks this month are Timber Creek Financial at number 5 with a negative 4.79% total return. At number 4, we have HHIS with a negative 6.32% total return. Number 3, Air Canada. We just added them too, negative 7.34%. EBIT's coming in at number 2 at negative 7.90%. And our toad of the month is, well, no surprise, it's Bell once again, negative 14.39%. Okay, let's look at the top 5 stocks this month. And we have at number 5, DIV 8.13%. EXE coming in at 13.08%. Love that Extendicare. Scotiabank 20.53%. And there we go. Look at Fortis. Look at Fortis go. Fortis 22.19%. And our goat of the month, well, it's Canoe EIT at 31.03%. It is really nice to see Canoe back on top for sure. Tune into the next update when we will do it all over again and see how the market is treating the challenge. I am excited for sure to see where we are going next and to see if Canoe can keep dominating the challenge. If you are interested in any of the stocks or ETFs that we have in the challenge, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on Trump-proof investments. Thank you for watching, and I will see you in the next video.